Yeah, morning. Okay, come back. Yeah, morning. Oh, some people are like yawning away to glory. Yeah. Let's take half an hour sleeping break. Yeah. Nah. Then we'll continue. Yeah. We'll see what is to be done. Yeah. Half an hour sleeping break. Yeah. We'll meet at 7 o'clock. What to say? Huh? So wish yeah. Someone like let's take 3 hours sleeping break, sir. Half an hour. What, sir? 3 hours, sir. Try, sir. I wish I could. Yeah. You know. Just wait 30 seconds. Wait. Let people just come in. Today, what we have on agenda is chapter number 5 that you told now. Fraud you want to do. So we'll see all related to fraud. Yeah. At 6:30, the only thing I think that is open is laptop. Yeah. Eyes also don't open that much. Arey, laptop, I told ya. Early in the morning, also your brain works like this. How come, yeah? Don't blame me for it. Yeah. No, also to an individual. Yeah. Mm, oh, yeah. That chapter, when we finish, if possible, we'll take one standard up after we finish chapter number 5. It is not that big a chapter, somewhere around 6 odd questions. Yeah. So how much fraud you want, yeah, in life? Yeah, first, we'll do a quick recap of risk assessment. We'll do SA 610 and then we'll jump to chapter 5. See how slowly and steadily people are joining. So nice now for you, yeah. Like you can come 10-15 minutes late. There's no problem. You can sleep that much extra. You can snooze the snow well. You can have 1-2 more snoozes. But yeah, we don't have to be professional. No. Because of you, I get up early. Because of you. Acha, because of me, you get up early. I think because of someone, we both get up early. Yeah, exactly. Common. I know. Somehow like, but you get paid for it. Hey, true, yeah. That's so true. Yeah. Okay, let's resume. People will keep coming. Okay, listen. As far as your chapter number 4 was concerned, the second part to chapter number 4 was risk assessment procedure. I told you basically here three types of questions are possible. One is on risk assessment procedure, next is risk of material misstatement, and the last one was audit risk and its components. Talking about risk assessment procedure, very simple. It is to identify and assess how much will be the ROMM in an organization, and why do you want to identify and assess ROMM? So that I can decide according to the assessed risk how much should be my audit procedures, whether my audit procedure should be more or whether my audit procedure should be less. So what is risk assessment procedures? To identify or assess the ROMM in an organization. So doubt, what do you mean by ROMM then? Acha, by the way, if you remember risk assessment procedures, I had given you techniques. I hope I can do inquiry with the management. Management, batao, batao. What if I tell you that I'm telling them batao, batao, they tell me no. So eventually, can I say, obviously, then I'm evaluating ROMM, na? That ultimately, obviously, if they are telling me no, they'll refuse. Obviously, the risk of material misstatement will be high. Exactly. So ultimately, I hope there are various ways of risk assessment procedures. So what are the techniques? Inquiry, then observation, inspection, analytical procedures, etc. So therefore, what we did was this part. Wait. See, techniques for performing risk assessment procedure. You can do inquiries of the management, you can do analytical procedures, you can do observation, you can do inspection. Okay. Thereafter, risk of material misstatement, that also is not that difficult. ROMM is nothing but the risk that the financial statements of the company can be materially misstated prior to audit. That is a risk. Important words are prior to audit. So has the auditor actually done audit of that? No. So before even doing that, he is making a conclusion or he is thinking that ultimately there is a high chance there will be a material misstatement. I'm just talking about material misstatement. Huh? I have nowhere talked about its pervasiveness. I am telling material misstatement. I am not telling material misstatement and pervasive, material misstatement, but not pervasive. I'm just telling material misstatement. So supposing if I ask the management, batao, batao, but they tell me no. So what do you feel now? Why they must have told no? What is the first thing that goes in your head? Because there is a high chance there may be a chance of a risk. I am telling that chance of a fraud, but there is a risk that it may be a fraud. Na? Can you tell me with certainty it will be a fraud? No. So obviously that you will have to then audit and check whether it is actually fraud or not. So basically I hope realize it is just a chance that it may be a fraud. Thereafter, your risk of material misstatement consists of basically two components. Now, one is nothing but I hope realize at the financial statements level, other we say at the assertion level. When you talk about nothing but financial statements, that is your business risk. When you talk about the other one, that is basically your control risk, which is ICS risk. Your business risk is basically known as inherent risk. So what is inherent risk? It is the susceptibility. What is susceptibility? To be prone to something. Correct. It is a susceptibility of a transaction to become a misstatement. So ultimately the transaction is weak. No, transaction cannot record itself. Transaction will be recorded by somebody. Now that somebody can record that transaction either in a fraudulent manner or in an erroneous manner. Whether it is fraudulent or whether it is erroneous, in one word, it is a misstatement. So there is always a chance, there is a susceptibility that a transaction of the company can become a misstatement. That is known as inherent risk. Why? Because you can never overcome that, because it will happen for every transaction that there is a chance that that transaction can become a misstatement. Next, control risk. Control risk is the risk that the ICS, which is set up by the management, will not be able to detect and prevent all the frauds and errors on a timely basis. It is for a simple reason, because ICS itself suffers from limitations. So will it be able to control everything? No. And therefore that again gives rise to risk of material misstatement. So risk of material misstatement arises because of two things. One is nothing but your business risk, and second is your control risk. Last one, audit risk. Audit risk is the risk that auditor may give an inappropriate opinion in a situation where financial statements are materially misstated. See, if financial statements are materially misstated, I should have given either adverse or qualified, because material misstatements, no. Obviously, if it is pervasive, adverse. If it is not pervasive, qualified. So obviously, if there are material misstatements, it should be either adverse or qualified. But what if I give a clean report instead of adverse and qualified? Then that becomes an inappropriate opinion now. So that is the risk, that I may give a clean report where I should have given qualified or adverse. So in other words, audit risk is the risk that auditor may give an inappropriate opinion in a situation where the financial statements are materially misstated. It is not reverse. Huh? It means, I hope, as audit risk is what? You are telling something good when it is bad. That is audit risk. So when it is a misstatement, you have to tell to the shareholders it's a misstatement. So tell to them when it is something bad. But when then you have to tell bad, no? So ultimately that is audit risk, that you are telling good when actually it is bad. It is not reverse. If it is good, the financial statements are good, they don't have that much misstatements, but you told that there are misstatements, then that does not cover an audit risk, because that risk is very insignificant. All cool? Okay. Thereafter, when you people talk about audit risk, it consists of three components. How to remember that? CID, correct. Now, CID, control, inherent, and detection. The first two remaining the same. As for ROMM, detection risk is nothing but the risk that let the auditor perform any procedures that he wants to perform. I hope realize eventually he will not be able to detect and prevent everything, because as much as he wants to check, still there'll be something which will be missed out. That type of a risk is known as detection risk, especially for a reason that he'll go for sampling. Yeah, if he'll go for sampling, obviously he's not going to detect some of the things. If he's not going to detect some of the things, he's not going to come across those misstatements anyways. So ultimately detection of everything is not possible. Asha, so how do you remember? CID. Thereafter, my simple question, why was detection risk not in ROMM? Correct, ROMM was prior to audit. When you tell that ROMM was prior to audit, detection risk is not prior to audit. Detection risk is during audit. It is because I hope you are unable to detect while you are auditing all the misstatements. So ultimately, I hope a detection risk cannot come in ROMM. Also, ROMM is a function of inherent risk and control risk. Audit risk is a function of three: inherent risk, control risk, and detection risk. So I can say that audit risk is a function of ROMM and detection risk. All cool? They ask you that in the exam, huh? For correct, incorrect, two marks question. Audit risk is a function of ROMM and inherent risk. No. I hope you realize ROMM already includes inherent risk. Audit risk is a function of ROMM and detection risk. It is CID. All cools? All cools. Thereafter, ultimately, I hope you realize SA610. This also was a, simple standard here. Nothing great about it. As such, very manageable on its own. When you talk about basically internal auditor, I hope you realize covered by SA610. Obviously, when you say using the work of internal auditor, who is using the work? Correct, statutory auditor. By the way, can I say statutory auditor here will be also known as external auditor, just for nothing but segregation, because we have internal, so obviously the opposite becomes external. Acha, statutory auditor and internal auditor, both of them, can they be the same? No. Is there a difference? Yes. Will they be always different? Yes. Now, statutory auditor basically has two options. Either he can use the work of the internal auditor, or he can use internal auditor. That internal auditor, you come and whatever now I am directing to you, now I will supervise you and I will review your work. Then ultimately, I hope that is known as using direct assistance. So two options are there. Either you use his work or you use him as direct assistance. Now, in either case, whether I, that is a statutory auditor, uses the work of the internal auditor or uses the internal auditor, who will be responsible for my opinion? I only. Even if I use his work or even if I use him, eventually the responsibility of that opinion which I give, I am the sole responsible person. He is not responsible along with me. Acha. On the other hand, I hope realize whilst you are using the work of internal auditor, there are certain evaluations to be done of the internal auditor. What evaluations? Obviously, first check the objectivity of using his work. Either what is the objective? Why do you want to use his work? Secondly, check the competence of that person, because there is no specific eligibility qualification for the IA. So check before you use his work whether he is competent or not. Check whether he's systematic and disciplined or not, and check whether ultimately he has that quality control or not. Quality control basically means ethical requirements. He should not come under the influence of the management every now and then, because if he keeps on coming under the influence, he is not good either in using the work or his direct assistance. Then if you are using his work, then ultimately first decide what is the nature and the scope of work that you want to use. What is the nature of the work? First check whether that particular work that he has done, what is the work that you are being able to use. Then what is the scope to the extent. Obviously, you don't have to exploit him. If you people remember, there was one point where ultimately your work, that is statutory auditor's work, should be greater than the internal auditor's work. It should not be a case where internal auditor's work that you are using is greater than what you are participating. So ultimately, it should not be exploitation where the scope of work is immense that you people extract from him. Also see the relevance to the external auditor. Relevance means whether that work that you want to use of his, whether it is relevant to you or not. Obviously, the work may be similar for you and him, but I hope it will not exactly be the same. So eventually you please check whether ultimately like segregation of duties. He will be the one who will be segregating the duties. You are not responsible for that. So is that work you want to do? No. So it is not relevant to you. So check the relevance of the work. When you are using his direct assistance, so you are using him. Wait, if I want to use the internal auditor, I should be allowed, no? So who will allow me? Management company, correct. So ultimately I hope I, the statutory auditor, will take a written agreement, written statement in signing from the company that give me in writing that you are allowing the internal auditor to basically work for me. So now I will direct, supervise and review his work, and you are allowing, and you will not interfere in whatever work we do. Also, internal auditor, you give me in writing that you will not disclose any information or the procedures that we are performing to the management. Because if you tell things to the management can manipulate financial statements. They will do fraud now. And therefore, you have to maintain confidentiality. All cool? All cool. Thereafter, if you remember, we had done SA 220, quality control in an audit of financial statements. We had the 3 skeletons, if you remember. Basically, I hope it lies quality control is basically what here? It is ethical requirements. It is independence to the extent possible. You have to be independent. You don't have to come under the influence of the management, even if they try to lure you by giving you certain gifts, by intimidating you. Don't try to get intimidated. You have to maintain that level of confidentiality, have to maintain that level of independence. So basically, I hope realize if in case of a firm, okay, there will be a team. Obviously, that team, partners, assistants, experts. That engagement team does not include internal auditors. Okay, that entire team has to follow the quality control aspect. But obviously, you will have to review. That review is known as engagement quality control review. Now, can the engagement partner himself review his work? No. And therefore, we say that particular review should happen by any other partner in the firm, some other person in the firm, any other suitably qualified external person, or the combination of the above. But if you select a combination, then that combination, the head of that team must be a chartered accountant. Also, when I say you have to review the work, what do you do to review? Basically, you do two things. You monitor the performance, you inspect the performance. Monitoring the performance will happen throughout the work. Inspection of the performance will happen at the end of the work. So when you monitor plus inspect, what you do is review. This is what I was talking about. All goals? All goals. Come on, take a fresh page. Let's begin. Comes. Chapter 5.